This conference will now be recorded.
Hey, everybody. Good morning, good afternoon, good early evening. Thanks for joining us here at the Cloud Communications Alliance for another one of our great webinars. We have a great session today talking about what's up with what's next with cloud communications collaboration by Michael Quinn and the QAdvisors team. Before we do that, I wanted to thank our sponsors for today. QAdvisors, you'll hear about QAdvisors in a minute. We have somebody here from Java, right, Karen? Graham, are you here? Graham? Going once. Okay, no Graham. If Graham pops on, I'll see if I can work him back in. We also have Bob Norberg from CloudAge here. Bob, you're here, right? I saw you a minute ago.
I am here. Yep.
Hey, turn on your screen and just tell us a little bit about what's going on there.
Okay. Sure. Let me see here. Okay, should be coming. There we go. Anyway, thanks everybody today. We're proud to sponsor today's webinar. The one thing I really wanted to highlight, and it sounds like I'm promoting CCA, but one of the benefits of CCA that we've been using a lot are the podcasts through Doug Green and the Telecom Reseller. And so early on, we started using that, and I try to do at least one a month with Doug. And I just want to kind of promote that. Go look at our channel. I know on the CCA website, our podcasts are up there. If you go to the Telecom Reseller site, you also have, we have a channel kind of with all of our podcasts up there. It's a great forum. Doug's a great podcast kind of moderator, really easy to set up. So take a look at those resources, certainly from our perspective. But I want to encourage you guys to reach out to Doug and set up podcasts to get your message out there.
Great, thank you for that. That was a great plug. I didn't expect it, but you're right. Doug does a great job on those podcasts. So, thank you. And then we also have. Hang on a second. I guess.
Followed by the pound or hash sign. Joe, if you do not have a pen, just press.
I'm going to give that a shot. There we go. And we also have with us, I guess, Graham Williams from Java. Graham, turn your light on. Turn your camera on. Going once. Okay, no Graham. Okay. Well, guys, if you see them, thank Jobber, thank QAdvisors, thank CloudAge for sponsoring today. Let me now, real quickly, you guys know the controls, so I don't need to tell you. There's a button where you can mute yourself. There's a button where you can turn on your camera, off your camera, and you can see you can change the view, if you will, see who's talking, or everybody or nobody. You guys know that stuff already. But Michael, let me turn it over to you, please, and take it away, please.
Great. Well, thanks, everybody. Thank you, Joe and Karen, for setting this up. I've not done one of these in a while. I've been trying to let some of my younger colleagues who are in the trenches give some of these chats, but Joe and the board asked me to chat today simply because there's just so much going on in our space. And the CCA, I'll give my plug, as one of the charter members and founders of this thing. I cannot believe how we've grown in the 10+ years that we've had this organization. And we're adding more folks from Europe on the board and more European members. And if folks can mute themselves, that would be great. A lot of feedback. Thank you. So there's just a tremendous amount of stuff that's going on, and we at Q, we have a really interesting perspective on this. We represent a lot of buyers, we represent a lot of sellers, we represent a lot of financing institutions that are interested in the space. And we were trying to think, as we're coming out of what we hope out of COVID, or into a manageable COVID. What really is happening in our space, and it's really a consolidation, marginalization. Joe, can you mute everybody but me? I'm just getting a lot of feedback.
I am too. Let me give that a shot. Hang on a second.
And I want this to be interactive. So if you have questions, please use the chat function I'd like to thank my colleagues Jordan Rupar and Pilar Forney for putting together this deck. We're doing a lot more quarterly reports on this space and the MSP and managed IT and infrastructure as a service space. So if you want to pick up any of these reports, just go to our website. You can download them. It's qllc.com. So our firm is in our 20th year. We have done most of the cloud deals in Europe. And a lot of them in the States. We've now hit our 175th cloud transaction, and we're announcing 6 more in the next 2 months. It's really been fascinating what's going on in our industry, and so to us, if you don't get bigger or you don't join up with folks who are doing roll-ups, you're going to be marginalized. And we're going to talk a little bit about what's happening and how, the wheat and the chaff are being separated. So, Joe, if you could turn to the next slide, that'd be awesome. And this is a little bit about our firm. We've now had our Munich office for 4 months. We're up to 4 folks, and I hope to get myself back to Holland and grow our office sometime this summer. And we're doing a lot of work in the UK with our partners at Acuity, and we've just closed our 2nd deal together in Switzerland. So we've done the Mission Labs Gamma deal, and then the Innovio fundraising, which is a cloud development ops company, which is very pertinent for what's going on in our space. So why don't we go on, Joe, to the next slide. So here's what's happening, right? You've got COVID was a wake-up call on so many different levels, right? From a global health crisis issue, but in our space, it's really been an eye-opener for those folks and those countries were primarily on-prem. There was a big oh shit moment, like how am I going to reach my distributed workforce? And also this aversion to the cloud in some markets, whether it's France, whether it's Germany, whether it's Italy, even larger enterprises across the globe had a moment of, my goodness, how are we going to be able to function as we get through this pandemic? And so there's been a lot of research done. And so the growth rate in our market has accelerated, which is great. And it allows us to move up the food chain to serve larger enterprises, more distributed enterprises. And if you look at what people are planning to do in the future, is there will be a distributed workforce. And the distributed workforce is going to be, part in person, part from home. Even our firm is going to have some type of distributed workforce. The result is that collaboration, communications, and I'm going to focus on omnichannel is critical. And it's very, very important for you to have the tools to capitalize on the marketplace that we're in. I mean, there's probably very few companies in our market that have not seen growth between 2019 to 2020 and 2020 into 2021. And if you're not growing, it's probably due to having the wrong product set to help your customers through into this accelerating global cloud migration. So why don't we go to the next slide, Joe? So workplace evolution is the theme of this presentation, right? If you look at every study being done, you have, what do we need? Cloud-based applications, video conferencing, contactless technologies, analytics and edge computing are being really, really focused on up and down the client stack, even small companies, 25, 50 employees. And then if you look at the current landscape, right, to the right, you have the CPaaS guys, who I firmly believe are going to continue to come into the cloud voice market. If you look what Cinch did in the US, they bought IntelliQuint and was really to get that voice traffic in that customer base. If you go to the collaboration and customer engagement, you saw Microsoft picking off Nuance. You saw Zoom doing two things in the last 6 months: 1.8 billion for M&A, and we're going to talk about that. And they just announced a venture fund solely for cloud-based applications, which, if you look at the top, that's what folks are really crying for. And then you look at the UCaaS guys, and there's been tremendous consolidation. We're going to talk about that. And then you have the old line Cisco's and Avayas of the world, and they're either shedding assets or really focusing on the things that they do best. Avaya focusing on cloud contact center, Cisco focusing on the Cisco WebEx solution platform. But all of these categories of folks are melding together, and that's what we're going to talk about today. You're not just competing against 8x8 in Ring Central anymore, okay? And it was easy to compete against them, I believe, because they don't provide any access. They don't provide an SLA. They still struggle to serve higher end businesses. But you're going to see over the next 18-24 months that you're competing against much larger, better funded companies. So why don't we go to the next slide? So here are Joe, please go back one. So the trends that are shaping cloud adoption, right? Acceleration of DX and migration to the cloud. We know that. Customer engagement is becoming more critical, and you're seeing companies spend more of their wallet share on customer engagement tools. Multi-channel communications. If you don't provide your customer base with the ability to communicate both internally and with their customer base via chat, via video, via social media, you are missing a slice of the revenue pie. And then programmable communications, namely CPaaS, again, less relevant to the 100 or 50 employees and less, but as you go from 50 to 200, it's becoming more and more important because it gives you that omni-channel ability tying back into customer engagement and customer experience. And we're seeing businesses, whether they're VARs, whether they're systems integrators, really focusing on multi-channel communications and omni-channel communications. Now, Joe, if we can move on. Joe, you getting that back? Somebody just.
I'm hearing that as well.
Clark, was that you from the mountaintop?
Wasn't me, but I heard it.
So I call this the circle of life. Okay, one of our team came up with this concept of next-gen business communication platforms. That is how we position our customers, right? So you started out kind of remember, we used to call it VoIP. We don't call it VoIP anymore. Then we added conferencing and collaboration, then workforce optimization, fixed mobile convergence. People are adding contact center. People are adding managed network and security, CPaaS, and then the holy grail being customer engagement. The end goal is to provide a full service portfolio of tools. There is really this focus on enterprise collaboration. And if you look at what's going on, enterprise communication software financings, each of the 4 years, 6.2 billion has been invested in the sector in 2019, and that is going even further. I don't know if folks picked up the newspaper today, but Mavenir just raised 500 million today from Koch's venture fund to do this 5G next-gen business comm platform. And this is where the world is heading. right? This is what people want. Now, not every one of your customers is going to need every one of these tools, but as they grow and they move into the 21st and 22nd century, here's where this world is going. I mean, I always think about when we started working in the cloud space in 2007, you had to explain to them what VoIP was. Okay, those days are long, long gone, and people really understand customer engagement, and you need to provide them with the tools to do that. So if we can go to the next slide, Joe. So we call it the third wave, right? We had wave one, which was VoIP, packet switching, application centric. Right now, we're clearly right in the heart of wave two, and COVID has accelerated that. This move from on-prem to cloud hosted. And if you look at a lot of the on-prem providers, whether it's Avaya, who did their deal with Ring, whether it's NEC, who did their deal with Intermedia, and there are a few other deals like that in the hopper, those folks have realized that their cloud products don't stand up to the scrutiny that companies need. But it's very task centric, right? So what we're looking for with our clients is, guys, you have to look to a cloud native platform. It's got to be team centric. It's got to be data centric, mobile native, and there needs to be an open API stack. And why is all of this important? Well, from an M&A perspective, your valuation cycle is way up. And if you're selling a business and you're still stuck in wave one or wave two, the valuation that you're going to get is much less than if you're ready in wave three. And to be honest, that's why some of the public companies are struggling. If you look at an 8x8, for example, even though they're trading at a 7 times revenue multiple, which is, it's kind of strange given that they're really not growing that fast, they're really still in wave two, and they're not really in wave three. Ring Central has positioned themselves as really on the cusp of wave three. And despite that their lack of significant profitability, their trading multiple is reflective of the market's view that they're at the tippy top of what's happening in this collaboration, team-centric mindset. And some of the deals that are happening that we're going to talk about, Microsoft Nuance, Gamma Mission Labs, Sangoma Star to Star, this is all to fast forward to get to wave three. And the valuations that are being done in those markets versus the valuations that are done in wave one and wave two, they're drastically different. And if you have an analytic component to your business, you're going to get a higher multiple because business analytics are driving everything right now. And if you look at folks, you look at the job markets for cloud companies, they all want data scientists right now. They all want folks to be able to cut through the data. The folks who are using Microsoft BI as a tool, we're seeing that with our customers on the cutting edge to really understand how their customers are using their service, in what instances are the companies using the service. That is really at the heart of wave three, because if you can tell what your clients are using, you can then upsell them on things that are complementary. Joe, if you go on. So let's take a look at what's going on in the public comps. And again, we highlight kind of the wave three. And what you'll see is that the folks to the far right are trading at much healthier multiples than folks in the far left column, right? And why is that? Let's start with some of the basics. The guys on the far left, primarily non-recurring revenue, low but steady margins, very limited contractual commitments. That goes to stickiness of revenue, total contract value. Okay, EBITDA margins are good, but the growth is not. So they trade at kind of 10 times EBITDA, 2.6 times revenue. Okay, if you look at what I would consider the more traditional UCaaS guys, they have better growth rate. They're trading at much higher EBITDA multiples, and they trade between, call it 3 and 5 times revenue. You have to take out Ring Central on that. Now, what's interesting about these folks is that they tend to have contracts, and all of these folks on this list have their own proprietary platform. And if you look at Vonage and Gamma in particular, they were what now is Cisco old BroadSoft shops, and they've diversified by having their own technology platform. And by doing so, their valuations have gone up because they can control their product development, easier API integration, but they want to trade more like technology companies like a Ring or an 8x8 than the guys on the left. And then you have the CCAS, the customer experience guys, right? And they really trade on a revenue multiple, all of them. And they're trading at kind of 10 times revenue, right? As the contact center has gone up and up, and customer experience has gone up and up in what folks value those businesses at. Lower CapEx, better margins, higher growth potential, right? Because that market is still really in the first inning of a 9-inning game. And then as you keep moving up in the stack, you have the collaboration guys traded 12 times revenue. So if you look at the Nuance Microsoft deal, it went for 19 times revenue. So very, very interesting. You have the Salesforce Slack combination, and then you have the CPaaS guys who are off the charts trading at 13 times revenue. And we can't even talk about EBITDA margins because they really don't have any EBITDA. They're just such high growth businesses. But if you look at the unicorns in Europe, it's MessageBird, it's CM, it's very, very interesting. And so as you're looking to add more tools in the toolbox, the more that you add, even on a smaller scale, your valuation will go up. And the one thing that's not on here is security. Okay, you folks that are providing both network and cloud comms to your customer base, if you can buy a small SOC or partner with someone that has a security operations center, that revenue is worth its weight in gold, kind of 5 to 7 times revenue. And there's not a deal that we do where when we look at a company, we always do a sum of the parts analysis. Sometimes it drives our clients crazy, but you can't just look at revenue multiples and you can't just look at EBITDA multiples, because not all revenue and not all EBITDA is created the same, and we're going to talk about that. Joe, why don't we go on to the next slide? So here's, again, and this presentation will be available. You're not a banker if you don't show comps, but if you look at the S&P to where unified comms are, all of our collaboration customer engagement folks, which is the gray and the yellow, their growth has been monumental, 188%, 243%, where the unified communication guys, these are the old line you see folks, they're trading, it's a 5% return, just very, very different. So why don't we get to the next one, Joe? So when you put it all together, what does all of this mean? The third wave is driving consolidation, and we call it technology-centric M&A, right? There's integrated cloud platforms are overtaking standalone solutions, right? People want more tools in the toolbox. They want cloud-native architecture, and they want to be able to integrate quickly with best of breed. So the modular API is critical. And if you're not a business that's facile with API integrations, the business we just sold to Gamma, I mean, they were integrated with over 30 different solution providers via API, and that's very important. Having a mobile-first approach through fixed mobile convergence, it's interesting. And a lot of folks take a very different view of this, right? Some people have a true fixed mobile solution as mobile becomes the primary platform for consumption. Other folks are doing it a little differently and becoming MVNOs and providing the mobile dial tone as well as the application, which I think is more unique to Europe than it is to the US. Messaging and collaboration are replacing UC clients, these thin clients. People prefer to talk via Teams, via Slack, via WebEx Teams. Nimble services, okay, that's something that we haven't really talked about, but vertical expertise is really, really important. And we've seen people give premium valuations to folks that are vertically focused in terms of potential solutions for an industry, whether it's senior living, whether it's education, whether it's real estate. When we sold Voz Telecom to Gamma, Voz is based in Spain, they had integrated with 7 different vertically focused CRM solutions. And that was really appealing because then you can not only focus on what the CRM provider does, but you can focus on messaging and other type of tailored solutions to that particular market. And look, there's a blurring line between CRM, customer experience, and CPaaS. So omni-channel communications, if you can't provide your client with the ability to integrate with both Teams and Slack and Zoom or other types of video and collaboration features, you're very much at a disadvantage to your competitors in the marketplace. And this digital transformation, this customer-centric, technology-centric M&A is really causing multiples in our industry to go up, up, and up. And there's a huge difference, Joe, if we go to the next slide. Sorry, I just got a call on Skype, so you probably won't hear me for 2 or 3 minutes. So apologies for that. Joe, can you hear me all right?
Okay. Yeah, we're hearing you fine, Michael.
Just, it's one of the strange things about Microsoft Teams. If your office line comes on and calls you when you're remote, nobody can, even if you disconnect, you have 30 seconds of silence. So it's really funny. So let's talk about some of these strategic acquisitions, okay? M&A activity in this market is more robust than it's ever been. It was crazy for the Q team last year, and it's even crazier this year. And we see a lot of other banks trying to come into our space because what they used to do is not happening anymore. And it's fascinating to compare their presentations to ours because they don't really understand the intricacies and the differentiators in the marketplace. But public company valuations in CPaaS, contact center, and the broader UCaaS ecosystem are expanding. There are fewer pure play UC transactions. So if you have a cloud platform, either on the voice side or on the analytics side or the contact center side, you're in demand because the market for those specifically niche verticals and native integration is lessening, right? So, for example, look at some of the deals that have been done in the last 24 months, right? Dialpad, a UCaaS provider, is bolstering its tech stack with video and call analytics, right? Between Talk IQ and High Five. Focus on 2 things, right? Collaboration and analytics. They just did a round at 100 million, 12 times revenue. That's a big multiple for a company with 100 million in revenue. Okay, then you've got the telcos moving up the application stack like Verizon buying Blue Jeans, right? People scoffed at that, but as COVID continued, that looks like a brilliant acquisition. And if you look what happened in the Nordic markets, PEX IP was going to do an M&A transaction. They said, well, if we can get 1/3 of the value of Ring, we'll go public. And they went public and they're trading very well. And then we have the big dog, right? The big dog's becoming a full stack and complete solution player, and that's Microsoft, right? They started with Meta, then they started with Affirm, then they bought Meta, then they announced their edge out with Azure, and then they just bought Nuance. And that's the latest step in their cloud strategy. And they're gonna provide direct dial eventually and disintermediate carriers. It's not gonna happen today, but it's gonna happen soon. And then you've got UCaaS providers like Cinch, Vonage continuing to buy things. The Vonage is really on a hiatus, but it's moving into that customer engagement stack. Joe, if we can go to the next page. And then you have CPaaS investments building scale, like Gig Capital, Caliera. You've got the AVC technology guys. They bought Candy from us. They just actually, oddly enough, were the subject of a hostile takeover last week, which is a first for me. A hostile takeover of a company that doesn't make any money and isn't really growing. So, and the takeover price, according to the press release, was at a significant premium to the trading price of the stock. So the market's gotten a little wiggy here. You have private equity guys like Francisco with Log Me In continuing to grow. You've got the contact center guys buying a lot of customer experience companies and automation companies. And then you have Ring and 8 filling in their product portfolio with digital interactions and customer experience. And all of these deals are driving up valuations. And there's a distinct difference between folks who have a proprietary stack or have a niche vertical and those who just resell. If you're just selling BroadSoft with a data connection or even over the top, you're going to be valued a heck of a lot less than a similarly sized company that has something unique to them, whether it's a technology stack, whether it's an industry vertical. And you need to find a way to differentiate yourself, because if you can't, then you're going to get a multiple of 1.25 to 1.5 times revenue, which equates to about 8 to 9 times EBITDA. Okay, and if you compare that with some of the recent deals, we're talking apples and watermelons. So Joe, if you go on to the next slide. So here is the QAdvisor valuation driver model, right? So we have had these 6 columns and they change depending on whether we're dealing with contact center, customer experience, voice, analytics. But what we're trying to convey to our clients is, look, technology matters, okay? Business models matter. Do you have contracted revenue? What is your annual revenue per user? What markets are you focusing on? Do you have a diversified customer base? What's your sales channel? Are you competing only against Ring and somebody in the channel? Or are you going direct? Do you have, different types of agents? Do you have a diversified channel? What's your quality of service? How do you integrate? Do you provide security? And then this vertical market expertise and innovation. These are all drivers. And then what we do is we put it into our blender. And Joe, if you go on to the next slide. So we do this for every one of our clients, and we call it the valuation metrics, okay? And we're happy to talk to anybody on this call about how you fit in. So this is one we did for a different client, but first we start with revenue mix. For us, not all revenue is created equal, right? Majority recurring revenue, that's very important. Contracted revenue, very important, right? Second is the sales channel. Do you have a strong direct channel? Do you have a strong channel, indirect channel? What commissions are you paying? What spiffs are you paying? Are you competing with Ring and paying north of 20% margins to your channel? What is your gross margin? If you're not in the 70% and up, margin and 30 to 40% operating margin, you're going to get a lower valuation, right? Growth and profitability. We talk about the rule of 40 all the time, which is revenue growth plus EBITDA margin. If it's greater than 40%, you're going to get a better valuation. Technology and quality of service. Is it proprietary? Is it scalable? Those are two critical things. What's your customer base? What does the churn look like? You know, and a lot of folks still don't know what their churn is. And when you have an indirect white label model, oftentimes you don't know what the underlying churn is. And that is something that you have to really dive into before you go to market. Contracted revenue, we've talked about. Specialization, vertical expertise, or being deep in one country. And then, you know, timing is everything, right? We know that the UK capital gains taxes are going to go up at some point. We know here in the good old US of A, capital gains taxes are going to go up. Interest rates are not staying at zero forever. So, you know, over the next 6 to 12 months, we're going to continue to see an M&A boom. And that's a huge deal. And then for the US guys, USF and state and local sales and telecom tax continue to play a huge role. I can't tell you how many deals we're still doing where that's still an issue. And so what we've been doing with our clients, in addition to doing a sales side quality of earnings if you don't have an audit, we're actually working with a tax firm who's part of the CCA, the Marashlian folks. They do USF audits for our clients before we go to market, because we don't want to have a, oh gosh, look at that, we owe X, Y, or Z. So that's something also to think about. And I know Cavell has done that in the UK and in Europe for other folks. So if we go on to slide 21, I want to talk a little bit about case studies. And no surprise to anybody, these are two case studies that we just did, because why would we highlight some other investment banks work? But we did the Star-to-Star Sangoma deal. And this is one of the highest cloud multiples for a large deal in recent times, 5.5 times revenue trailing. And Star-to-Star, proprietary technology company, cloud native, it's got collaboration. It has all of those things that we just talked about, plus a quality management team. And you have Sangoma, which has been buying a number of smaller businesses. They're on the Toronto Stock Exchange. They're moving to NASDAQ. And they want to grow their business. And they wanted it was something that had a significantly deep technology stack and had a lot of good revenue and very good growth. And the valuations that a Star-to-Star are getting versus another company with a similar 100 million plus revenue were much higher because of that proprietary technology stack. If this was a $200 million $100 million BroadSoft reseller, the purchase price would have been 200 million, not 500 million. And so the key is we ran a very detailed process with a lot of other companies, but this was about being again a matchmaker and finding that perfect buyer for your clients, somebody who appreciated their technology stack, their delivery capabilities, their cloud native capabilities, and obviously had the ability to pay in both cash and stock. If you go to the next slide, which is the Mission Labs Gamma deal. Mission Labs is a company that many of you have probably never even heard of. It's started by two entrepreneurs. They built a really interesting cloud native contact center and communications platform. They're also the key contact center platform for Amazon Connect in the UK. And again, this is all about finding the right buyer. We didn't even really run a detailed process. We just did a market check, but we knew that Gamma was growing in Europe. Their growth both in the UK and their organic growth was very good, but they wanted something that was a differentiator. And what what Mission Labs gives Gamma is their own proprietary UCaaS stack and the contact center stack. And it happened to be, up the road. And so if you look at what we got for Mission Labs, it was north of 7 times revenue for a fiscal year ending March of this year. And again, the Mission Labs an interesting business. They had a white label business and a enterprise business. But again, it's finding that right buyer that's going to value your business greater than any other buyer. And we did have other offers, but they were not as high as this, because finding that right partnership between the buyer and seller, the whole team is staying on. They're very excited. It's a great cultural fit, and you cannot underestimate the cultural fit when you're doing an M&A deal. And a banker is, with your client, the client's the piano, right? We have to press the right key to get the right note. And that's our approach. Our approach is very much tailored to the individual needs of our business owners, their investors, and their team. Because M&A deals fail because the right buyer and the right seller are not matched up. Okay, it's whose wallet the money is coming out of is critical, right? Whether it's a private equity, a venture, or a strategic. And you have to get that culture fit right. And oftentimes, if you get the culture fit right, the valuation takes care of itself. And that's kind of a soft thing. And if having done enough deals, I guess it's one of the advantages of getting into your 50s, you can tell which deals are going to work, right? And sometimes the highest price isn't the best deal for the seller, right? And you have to take your time to do as much due diligence on the seller, on the buyer, as the buyer is doing on the seller. So Joe, I'm going to stop here, and we can open it up for questions.
Okay, Michael, fascinating. Well, we do have to, let me start with Autumn. Autumn, you want to unmute yourself? There you go.
Yeah.
Go ahead. You might as well ask the man directly.
Yeah, so I mean, one of the things that I noticed in the wave 3 is kind of the cloud native apps that you were talking about. And one person I didn't see on the list, and I didn't know if that's just because they fall into a completely different category, is Teams, right? Because I would put them in the same bucket as like a Slack or a Zoom, but of course it goes far beyond that. And, you already said some very interesting things, because I think, a lot of us that are sitting here know that partnering up with Teams makes a lot of sense. But I think myself, I always personally wonder, when are they climbing into our sandbox? Because I think they are at some point.
It's a great question. Yeah. I mean, to me, they're almost like, they're like Zeus on high on Mount Olympus now, and they're covering all the waves, right? Metaswitch gave them wave 1. Affirm and Azure to the Edge gives them wave 2. Nuance gives them, and Teams give them wave 3, right? So they are in your sandbox, whether you like it or not. The question becomes, do they have a sales force that is going to focus on and want to focus on sub 100-person businesses, right? Or are they going to want to focus on the higher end? And I think, Autumn, that's really still up in the air, because if you remember, their initial press releases were all geared to basically helping bigger carriers get into wave 3, right? Mobile, chat, collaboration. And now with each deal that they're doing, you can see them going down market to going direct to the enterprise. But I think that that's going to take much longer, right? So they're already in wave 3, but they're still more of a carrier focus right now than an enterprise focus. But that will change, right? Because there's a lot more enterprises and medium-sized businesses than there are carriers. I think what they don't want to do personally, they don't want to do what Cisco did, right? Cisco basically said, we're gonna change our licensing approach. So Cisco want to manage your platform, and the carriers are saying, well, you don't have that DNA. Microsoft's acquiring that DNA so that the carriers don't feel like they're a threat like the Cisco folks are. Hopefully that answers your question.
Yeah, I mean, do you see them, sorry, getting that out. But do you see them getting a lot more heavier into like the contact center space and some of these other things on the more, traditional VoIP side and that side of the business in the future? Or do you think they're going to still partner for that?
No, I think they're going to become a one-stop shop. If you look at, like, take Zoom. Zoom raised 1.8 billion. The first thing they talked about was contact center. And
I'm
so
on this really good webinar that I jumped off of to do a client, and it's all on M&A.
Go ahead. Go ahead, Michael.
I'm sorry, I didn't hear that.
No, somebody that was somebody interference. Go ahead.
Oh, okay. And then Ian had a comment about disintermediation. And the short answer is we don't know what the timeline is for that, but it wouldn't shock me if it's within the next 12 to 18 months, Ian, about them going direct. They have to buy somebody, I think. Like I honestly, I know that Voxbone was sold to Bandwidth, but once I heard that Voxbone was on the market, we all had a bet that Microsoft would buy it. And I was really surprised that they didn't. And there's a few other companies that are smaller versions of Voxbone, and I can see Microsoft buying one of those and using that entity to be kind of the number provider for them. That would be my guess.
So that was Michael's answer to Ian's question about Microsoft delivering direct dial tone. In case you guys missed the question.
So there's a lot of people building a strategy around sidling up to Microsoft and using the voice as part of being the blend for the customer and then selling other services on the round so that they make a better revenue share. So you think that core voice piece is under real threat within 18 months?
I do.
Okay.
Very good. And Clark, you had a question too. Go ahead. Why don't you go ahead and phrase it?
Yeah, I was wondering that, and the presentation was great, Mike. I appreciate that. Some interesting stats I hadn't seen before on how COVID accelerated cloud communications. So it'll be nice to have some of this information. But my question was about, as we look at, there's this kind of, is there a balance between companies who want to look like a full SaaS and everything's software and everything's in the cloud, yet they want to go up market to a customer who wants full accountability and SLAs and QoS and security and some things that sometimes require access to do that. Do we think customers, as you go up market, are willing to put those pieces together, kind of like Microsoft has you do, with access to other things? Or do they want the full solution from somebody as far as full accountability, but then those guys don't look like a true SaaS from a valuation standpoint?
Look, it's a great question, and Clark, there's really no right answer, right? Because you have the Ring Central model, right, which is purely over the top, and Infone has followed that model in Europe as well. And then you have, I'll call it the Vonage model or the Destiny and Gamma model, the Enreach model in Europe, and there's merit to both models. And I think where the difference is if you're providing the bandwidth and the access and some of the more traditional comm services, but you're doing it with your own proprietary platform, I don't think the market really penalizes you, because your margins on your SaaS product are, as close to 100% as you can. So on a blended basis, you're still in that kind of 60 to 70% EBITDA margin, right? And you provide an SLA that a Ring Central can, and particularly for medium-sized businesses, which I define as up to 500, right? Those 500 employees, those businesses want that one throat to choke, right? And they don't want a deal. Like even us, right? We have 30 something seats, and we have call tower, which works great, but we have Comcast, right? Because they have a giant fiber pipe into our building in Denver and our building in San Francisco. And so but we have an IT manager who manages all of that. But can you imagine if one of us had to manage it? We'd lose our shit, you know?
Yeah, and I think maybe kind of a happy medium there, I guess, is SD-WAN now, where you have providers able to go over the top and still control QoS to a certain degree.
And that's
an access provider, right?
And that's a great, and I wish I had mentioned that. That's why you're the president. So MPLS is not going away. Okay, everybody thought, well, SD-WAN is going to cannibalize MPLS. And what we're finding is MPLS is here to stay. What SD-WAN is makes it more profitable and easier to install, right? And it gets the margins better. And it gives you a security function that the MPLS may not have had. So delivering that full bundle, I still think is critical. Look, the people who are getting crushed from a valuation standpoint are the folks who are BroadSoft resellers delivering a circuit, because they're getting price pressure on the price of the circuit from the cable companies. They're getting price pressure from Cisco on the lease costs, right? So they're being squeezed both ways, right? If you have your own stack, you can fight a one front battle, not a two front battle.
Yeah, agreed. Yeah. Thank you.
Great. Any other questions? We are going to be making this presentation available, Michael?
Yes.
Great. Hey, Chris Carbello, you had a quick comment about Operator Connect and direct routing?
I think Mike's perspective is amazing, and perhaps could bring to truth at some point. Being part of Microsoft now, I am more sanguine on the opportunities for operators. I think the investment in direct routing and recently Operator Connect signals a desire to not take over the sandbox, but to find ways to have operators and teams peacefully coexist. There's always conflict at the borders, but hopefully that signals the direction of where Microsoft is going, but remains to be seen.
Yeah, I mean, look, Chris, if you look at Microsoft's strategy, it's really brilliant, right? And Google and Amazon are definitely 2 steps behind Microsoft now. So to me, it's a 2-horse race for global domination between Microsoft and Zoom. And I think Microsoft just has a lot more, they just have such a leg up right now, right? And so it's going to be interesting to see over the next few years what happens. But it's really been fascinating, because what Microsoft has done, and we haven't even talked about a lot of the digital transformation stuff that they're working with on kind of the infrastructure as a service providers to migrate to the hyperscale. And so that whole ecosystem of Microsoft partners, and we've left out Microsoft Dynamics, right? It's a whole nother sales channel that is really enabling digital transformation quicker. I mean, our client Solgari is a key player in the Dynamics infrastructure environment, and they get their leads from the Dynamics sales channel, not from the rest of it. So there's lots of pockets. Do I have a comment on the NetSapiens purchase by Crescendo? I do, but it may be X-rated. Look, I think that the NetSapiens product is a very solid product. And if you look at the performance of companies like SkySwitch, OneSource that we sold to GT&T, if you look at the performance of of other companies that are NetSapiens resellers, whether they be Next Level or Knology. It's a very solid product. And I understand why Crescendo bought it, right? Because it gives them a differentiator. It allows them to control their own destiny. That purchase is only going to work, in my humble opinion, is if Crescendo raises additional capital to go out and roll up the NetSapiens universe. It's kind of like what people were doing when they were rolling up the BroadSoft universe. So just buying NetSapiens alone, I don't think is a great transaction, to be perfectly honest. But if the plan is then to roll up that ecosystem, then it makes a lot more sense, David.
Just a quick thing, I want to thank our sponsors one more time, QAdvisors. Thank you, Michael, and your whole group for putting this great presentation together. Thank you, CloudEdge, and Jabra. Graham, you got on a little bit late, but I wanted to give you just a quick thank you and say hello to us, please. Tell us what's going on in Jabra land.
Yeah, thanks, Joe. Yeah, sorry I was late. I was double booked. I'm suffering from Zoom fatigue myself these weeks. But yeah, so Jabra's actually just launching a new video range, April 27th. If you want to ping me an email, I can send you a webinar link, but we're going to enter the video space. We already have it with this 180-degree camera, Panacast camera, which is intelligent camera, intelligent zoom, can people detect in the room, etc. We launched that about a year ago, but we are jumping into some more stuff onto the video side for obvious reasons, right? We all know where the video's gone in the last 12 months with the pandemic. So it's an exciting time for integration with service providers. You know, we've obviously linked in with the big guys like Teams and Zooms, of course, but we are talking to a lot of CCA members about integrating onto their video platform as well. So I thought I'd come along and mention that video play, Joe.
Great, Graham. Well, thank you again. Thank you for sponsoring. And Michael, one more time, back to you to say any closing words of wisdom.
There was no, look, much appreciated. We're available, you know, to chat about any of this stuff. You know, Clark had asked a question about what are your current thoughts on SPACs in this environment, and I'm not a big SPAC guy. If you look at the trading prices, they're all down 30% from their initial offering price. I don't think they have any sponsor coverage. I think it's a way for the SPAC guys to get rich and everybody else to look silly. That's my personal view, not QAdvisors' view on SPACs, just Michael Quinn's view. But appreciate the questions and the feedback. And again, feel free to reach out. My email is quinn@qllc.com. Happy to set up a chat with me and our teams in Europe and the US. And Joe, thanks for the opportunity.
Michael, thank you. Everybody else have a great rest of the day. We have another webinar coming up in about 3 weeks or so, and we'll send you information on that as well. Thank you all very much, everybody. Have a good one and be safe.
Thanks. Good job.
Great event. Thanks, guys. Speak soon.
Bye, Ian.